IVM.
There's a quick survey to fill out on ivmpodcast.com/survey. It lets us know a little bit more about who's listening to us. And you know what? We're going to do a few prizes. So, we'll do a random drawing of maybe 10 people and we'll send you all some swag. Remember, that's ivmpodcast.com/survey where you can fill out the survey.
Hey everyone, welcome to Shunya One, episode 177. A very special episode coming up for you. We are talking to Darshan Bathija, the CEO and co-founder of Vauld. Vauld is a very, very interesting company in the crypto space. In fact, they're building something, which is one of the various products out there, of course, in crypto overall. And I'm sure you guys have heard of so many cool ideas that have come out of this domain, which is so interesting. But in a very volatile sort of asset class, these guys are actually building a long-term investment product. So if you've never got into crypto so far, and if you have just been on the sidelines wondering what the chaos is all about, I think the conversation with Darshan will be really interesting because he talks about how exactly there is actually an opportunity to sit and earn good returns on crypto as an investment. So let's take a break, come back, and talk to Darshan about exactly what this whole world of Vault is about.
Ladies, I'm sure you will relate to it if I say that we are constantly busy with work, studies, cooking, and what not. And amidst all of this, we often forget an important element that needs our desperate attention: finance. So here we are, bringing to you SBI Life presents A Sip of Finance, a women-exclusive podcast where we will teach you how to manage personal finances in a simple and straightforward way with your host, Priyanka Acharya, a finance expert who's been in the industry for 14 plus years. And not just in English, but in 7 more languages. So tune in every Tuesday for fresh episodes on the IVM Podcast Network and all major podcast streaming platforms.
Hey Darshan, how are you doing? Welcome to Shunya One. Thank you for making the time.
Thanks so much for having me.
No, it's great to see you. I understand you're back in India at the moment, but normally you're based outside of the country, right?
So I typically sit out of Singapore. That's primarily because we're licensing there. But come home to spend a little time with family, and then going to meet some of the teammates sitting out of India.
Awesome. So what has your story been like? Obviously we love to understand a little bit more about the business, Vault, everything you guys do. But personally for you, how did you get into this domain overall? And what's your entrepreneurship journey been like?
Sure. So I think I got into the entrepreneurial mindset almost by accident. I always wore a finance hat before anything else, and I thought I'd do something in the financial domain. An engineer by education, quickly realized that I got into engineering because of my affinity towards numbers, and I thought I could channel that better in finance. So it took me about 2.5 years to get into private equity. It took me about 6 months to get out. I quickly realized when I was there that the way money works and the way at least the financial systems are structured was to benefit the people in control of capital, as opposed to capital being a positive influencer of good. And as an ideal 22-year-old, that was very disheartening. So I stepped away, all the while closely monitoring where disruption in finance was really happening, and joined an early stage startup with some of my friends. I was part of the growth team over there. Took it from seed to Series A. They ended up getting acquired by an academy. And during my time there, some of the smartest people that I know kept bringing Bitcoin up to me. And, initially I dismissed it as this pretty noisy, speculative asset. But it just kept coming back. So I decided maybe I should take a weekend to read about it. A weekend became a week became a few weeks, a few weeks became a month. And then, there was no turning back. I knew this was potentially what could challenge everything in the traditional financial sense. And that's why I was really excited about it. couldn't at the time see companies really solving for the passive investor. All I saw when I logged into crypto platforms at the time was, complex charts, trading, the new coin of the week, margin, borrow and trade further, and just the incentives towards long-term wealth building was not there. And I felt that there's an opportunity for a company to really cater to the passive investor very well, and that's why we ended up beginning.
It's interesting you mentioned the research bit of how you got into crypto, and that's so common to see in a lot of people who obviously eventually become passionate about the space, where you start somewhere and you go down this rabbit hole of just understanding the world and the domain a little bit more. Obviously, you being a finance background person looked at it as assets and how to make wealth, like you just said. What was the that's also a sector which is so it's so diverse in the kind of things you can build on, right? When you said you didn't see anyone focusing on long-term wealth creation, how did you know that there was even a market for it? I mean, if you look at the first generation crypto folks, they're all traders, holders, or whatever moniker you want to call them. So how did you think that there was a market? Why did you think there would be a market for people who otherwise put money in FDs and then now they'll choose to do it with you in Bitcoin and so on?
So thanks for the question. I think the second generation of folks who got into crypto were the traders, the active traders who speculate on the asset. The first generation really were libertarian folks who wanted a system disconnected from the centralized banking networks, and that aspect attracted me more towards crypto than anything else. And while that customer base was early, they were still sitting on early and in turn not very big, at least at the time, whereas most people were getting in for short-term speculation. I knew that most of the capital is actually sitting dormant. I mean, you can monitor wallet activity, you can monitor basically year-on-year growth of the asset class, and in turn, time what the average deposit, what the average dollar value per owner would be if, let's say, they just blindly joined in 2016 or 2015 or 2014, right? So the Pareto clearly said that A, lots of these wallets are not active, and B, that's where most of the capital is actually sitting. But all of that was, research that contributed towards building the conviction. I just wanted to build a platform that I could use and build well, more than anything else. So I was the first customer.
Wonderful. And given that it's such a volatile asset, right? As an asset class, it's volatile because, I mean, so many reasons, but amongst others, it's like anyone can trade anywhere. There's really no boundaries to what you can do with your crypto. It just moves across the globe instantly, 24/7. Yeah. So how did you go about actually solving the problem? Like getting into what the Vault product is a little bit, right? What is the underlying methodology in which you actually are able to offer the investment services that you offer? I know you guys, you offer lending, you offer interest on your crypto. How does the mechanism actually work for all parties to make money?
Sure. So when we decided to start, we really wanted to put a finger on what is that one thing that Vault is going to do uniquely well, such that maybe 2 years down the line or 3 years down the line, we could call ourselves world class, because we knew crypto is a global opportunity. It's not really localized. And if you look at the largest crypto companies, they're not really local crypto opportunities. They're trying to service the global crypto market. So we knew, okay, we had to, we identified a persona, which is the possibly high net worth passive investor. We knew that this customer is global. The good thing is you don't need banking integrations in every country to service them from day one because they're already in crypto. So, okay, then now that we know that they don't trade, they trade less than once a month. What do they want to do with their crypto? Some people use it for payments, but most people really hold on to it and want that appreciation. A lot of people are in it for the medium to long term growth of the asset class in itself, and in turn, the tokens that they're bullish on. So we felt, okay, since that's why most people have adopted it, and that's why most people are holding on to it for that long, how do we drive that further? And there were a few things that came up. Version 1 of the product was, of course, is there a way for us to build a credit ecosystem such that we can connect lenders and borrowers, such that the people actually sitting on this capital can compound their asset? Whereas in the absence of the system, if they had one Bitcoin, 2 years later, 3 years later, they'd still be sitting with one Bitcoin, right? And let's say if we built a system of credit, whatever that interest rate may be, for argument's sake, let's say it was 5 or 10%, 1 year later it would be 1.1, 2 years later it would be 1.21, and 3 years later it would be 3.3, maybe 4 or 5, right? Sorry, 1.34 or something. So we felt that, okay, they have a relatively long time horizon, and an interest rate product could be an excellent hook to getting them on the platform. So that's why we started with that. But then over time, we saw customers really wanting to commit to longer term lock-ins, because they know they're not, irrespective of what the market does, they're not going to trade in the next 1 year. So that's where the fixed deposit product came in, which is commit for a longer duration, earn higher interest. Then we noticed customers trying to time the market, but not very efficiently. So every time the market would go up or down, not by 2% or something like that, because that's what an active trader would do. But let's say the market moved by 10%. They would want to do something. Like they may want to buy a little more. They may want to change their allocation a little bit. Yeah. And we saw them moving their capital from Vault to an exchange and then bring it back. So we built a simple swap, then a more complicated and more robust system for that transaction to be captured, because capital leaving the platform, we classified as that is churn. And then from there, okay, so their swap use case was captured within Vault. And what we were not doing, however, is helping them. They were still trying to time the market in some shape or form. Passive investors are not very good at doing this. So we built the SIP product. We call it automatic investment plans. And you can either average based on time, which is every day, week, or month. But more importantly, you can also buy the dip. So every time the market drops 5% or 10%, you can auto buy the asset or the basket of assets that you're buying. So that's in a sense what Vault does today. And over the next maybe 12 months, we're going to drive the long-term investor, passive investors persona much better and offer a much more holistic experience, not just from a tax and compliance standpoint, because I think that's a lot of what's happening in India and the rest of the world. Yeah. There's regulatory clarity, there's taxation clarity, all of that is happening, which is great. More institutional capital is going to come in. It's becoming more institutionalized, if I may, right? But even beyond that, how do we ensure that this is going to be the default asset for saving or payments, or a combination of both? How do we ensure that it's there? We capture a higher ratio of the total banking transactions or banking activity. And that's how we think about building our roadmap from there.
Yeah, just to dig a little deeper on everything you explained, like what you just spoke about is amazingly, it's great because it captures, like you said, typical behavior which people who hold crypto or hold crypto as an asset class anyway do, right? They know what they have. They know the value grows over time. They typically want to buy the dip and so on and so forth. But one fundamental difference, and again, a layman's view of looking at this, is that unlike a traditional bank who works on fiat currency, their entire, they do what they do and they earn interest and money and so on and so forth, is because they redeploy all the capital and assets that they hold into wherever people can use the money, right? So banks lend to, let's say, real estate projects or other big places where money gets spent, and capital is then returned based on the business that the money gets spent in. I don't think that's exactly the same with crypto, because there's very few places you can spend your crypto and then earn crypto back. So how do you handle that? Or does that eventually become just go into fiat again?
So there are a few use cases as to where this capital gets deployed. One is folks want an equity line of credit. Let's say you're sitting on Reliance Industries, just a few shares of that, and hypothetically it's appreciated maybe 50x. The second you sell, you're looking at a capital gains liability in a very meaningful manner, right? Depending on where you are, it could be anywhere between maybe 20% to upwards of 40, 50%, even if, let's say,
Yes.
depending on the state in the US. So just for you to get access to that capital, you'll have to book that 20 to 50%, and your $100 basically becomes $48 or $58, depending on what the tax rate is. That $2 is less because that was your principal amount. Instead of that, what we realized is people want access to their liquidity, but a system of credit is more efficient to make that happen. So we facilitate loans against their portfolio, and they can draw down as an equity line of credit while holding on to that 100% in terms of principal. They get 67% of their total principal as a loan, and they can do whatever they want with that. So they borrow dollars in the crypto world, and they may choose to do whatever they may want to. So some of them take it to an exchange and then swap it for dollars. They take it to a local exchange, depending on where they are. So simple over-collateralized leverage is one example. Hedge funds and traders drive the return on equity through margin, right? So if they have a trading strategy, you can really double down on that once you have access to more capital, and they're very happy paying for that access to capital. That's a significant allocation as well. And then the third is some of these tokens have a consensus mechanism called proof of stake. So we stake the assets on our customer's behalf, and that's where the yield is generated.
That's actually a good, I think everyone's heard this word thrown around a little bit. I'm not sure if everyone knows the details. So could you explain what exactly staking is and how that works again?
Staking is a mechanism to which you validate the system of consensus on a blockchain. Now, if, let's say, you are maintaining a centralized database, you would be reading, you would be controlling the read and write function. So no redundancy. I mean, if, let's say, there was only one copy of the ledger, maybe I can zoom out. Think of Paytm, right? Paytm is essentially a ledger of balances before UPI, probably, right? Paytm lets you top up your Paytm wallet. It lets you settle amongst your friends and let you pay a merchant. It's basically a database where your username is your phone number, your balance is your balance, and your password is your password. Similarly, the crypto network has a parallel, which is your username is your public key, your balance is your balance, and your private key is your password. But they function differently. Instead of Paytm having complete writing capability, which is what it does, right? It can close your account, it can reverse transactions, it can just do a bunch of things, right? If, let's say, they don't like what you're doing, they can deduct your balance without your consent. And there are pros and cons to a centralized system, primarily scalability. The cons clearly being, if you actually want to control your funds, it's not the best system to have that in. And draw that same parallel with Paytm to a bank, it's the same system. Draw that same parallel to a CBDC, it's the same system. It's just depending on who has writing control. On a blockchain, however, nobody has writing control. Or rather, the writing control on the database is determined by some broadly defined technology rules. And the way to reach consensus on what the actual transactions are and what the potential fraud transactions are is the system of consensus. Now, the crypto network has two primary system of consensus. One is the proof of stake, and then the original one, or the one Bitcoin and Ethereum currently operate on, is a proof of work network. So there are, again, efficiencies and inefficiencies versus proof of stake and proof of work. But just long story short, the incentive to ensure that there is decentralization and the consensus is done right, there's a reward that's paid out. Now that reward is, so you can claim that reward if you either mine on proof of work or you stake on proof of stake. Either way, you're helping the system of consensus. Now, to help the system of consensus, you get paid, and that payment essentially is paid in the form of an interest payment with on board. So we abstract all of that complexity away, and all we say is, tum kharido, tum becho. You don't need to do anything else. You get the interest rate paid to you automatically. And we manage that capital on the customer's behalf.
Wow. And that's exactly, that efficiency is exactly what you're capturing. Very, very interesting.
Yeah.
Darshan, I know we're down our own rabbit hole of crypto talk. So I'm going to take a quick break, come back, and then continue our conversation for everyone else. Thank you.
Hello, everybody. It's been another great week on the IVM Podcast Network. On Mind the Gender Gap, host Naina Kumar talks to experts Niharika Vora and Dipti Ravula about the social, structural, and economic barriers women entrepreneurs face. On Big Talk About Tiny Humans, Devi Shobha and Meghna explain how to talk to children about porn. Can you be forced to vote? Host Priya Mirza talks about this on The Longest Constitution. On Press Decode, Sarah Vagda and Prafulla discuss the recent controversy surrounding Indian languages. And on Postcards from Nowhere, Utsav shares exactly what India's culinary heritage can teach us. Do follow us on social media. We're IVM Podcast on Twitter, Facebook, Instagram, and LinkedIn. On LinkedIn, we've been doing a series of profiles of people within the office, so do check that out for sure. And remember, if you're enjoying this show or any of our other shows for that matter, please do tell a friend. Also, don't forget to rate us on any platforms you're listening on. And you can also check us out on YouTube. We have a page on our website, ivmpodcast.com/YouTube, with a list of all our channels. We're also doing a small listener survey to better understand how you, the listener, responds to the advertising on our network. And also, we just want to know a little bit more about you. We would really appreciate it if you could spare a few minutes to fill it out. It will really help us build some better shows for you. And finally, we'd like to thank our sponsors on the network this week, SBI Life Insurance and Jupiter, a digital banking app.
Welcome back, everyone. Hey, Darshan. Thank you for going into so much detail just before the break around exactly what proof of stake is, and that's actually interesting because these are all technologies which the whole entire crypto world is built on top of tech rules versus business rules per se, which the world of maybe rupees and dollars has been built on all this while. So that's very interesting. But getting into why crypto as a asset class and as a domain is so widely contested especially in let's say financial authority circles and regulatory circles, and to the fact that even you guys as a company are registered outside of India, and you provide all of these services, like you said, of course, globally. So what's your take on that? Like, was there anything that you had to purposefully step out of the country for in order to provide the services that you provide?
So let me unequivocally state something. You run a product, and when you're building a product for the world, there are certain, depending on where your market is and where your customers is, it's more efficient to have your parent company in that same region. So a classic example is our SaaS companies that some of us may know, Zoho, Freshworks, all of them. They're actually registered in the US, and that's because they know where their enterprise customers are. It's in the US, so just more efficient to ensure that entity in itself, or the invoicing entity, however that may look like, is based in the US. Now, for us, we knew we were building a product from day one, product for the world from day one. And because of that, we knew we were going after the Asian opportunity. And when we zoomed out and look at financial hubs for Asia, there were only one or two desks. One was Hong Kong and the next was Singapore. And when we evaluated both of them, we saw that the MAS, which is the RBI equivalent in Singapore, had made more progress around regulatory clarity with this asset, which is why we decided to register in Singapore. And at the time, we didn't even know whether we would service Indian customers, just so you know, because this was 2018 and 2019, and there was a banking ban then. So we were, for all intents and purposes, building for Asia, not for India. And of course, because of the Supreme Court verdict being over, the Supreme Court overturned the RBI banking ban, we saw that India was an underserved opportunity, which is why we also onboard customers from India. And at that time, it didn't make sense to restructure. But given that most of our business is still from outside India, it makes more sense to have the entity in the region where most of the business is. So that is why we're in Singapore. But again, regulatory clarity being one, they've had licensing clarity since Jan of 2020, which in the crypto world is very, very long. I think time just moves much slower and a lot more happens in the same amount of time. I mean, rate of change is also very high in crypto. Yeah. So it's been one of those regions that have clearly positioned themselves as a crypto destination. So it just made sense for us to be there.
Right. And, given that the market in India, again, specifically is at least getting better than before, even though it has its own complexities and additionals, taxes and whatnot have you. Are you still seeing interest from, like you said, it's an underserved market. What's been your product's interest specifically, right? As a investment product, as a ways to sort of grow your assets. What's the feedback been from Indian customers? Is that something they would rather do, trade in volatility and so on and so forth? Do you get that feedback often?
So if you look at, both of those activities happen in a very meaningful manner, even in India. But if you look at size of business, if let's say crypto was accepted a long time ago versus whether it was relatively recent, crypto has had regulatory clarity in New York since 2017. That's 5 years now. So people who got in 2015, 16, 17 in the US have had a tremendous upside of the appreciation of the asset class. So even if you were passive, because you're sitting on face value far higher than what you originally invested, there's more of a hold on to your asset for the long-term mentality versus, Indians getting the opportunity to really reinvest in crypto post the banking ban since 2020. So I would say the ratio of customers is more skewed, or even the activity is more skewed on the trading side in India, whereas in the more developed markets, there's enough of an opportunity for both. But that doesn't mean over a 2-3 year timeline, we can't build a robust financial institution with crypto at the center. It's just that it's not enough of an opportunity if, let's say, you were just building a credit product just for India, especially because you don't want to put all your eggs in one basket. Regulation could go either way. I'm not saying that it will, but just from a de-risking perspective, you don't want to do that.
Right. No, I was actually more trying to understand if there is now that, to the earlier example, people who, India is known as a country of hoarders in some sense, right? I mean, we pile up on gold, love our FDs. We, like the old school, larger market of people who save, actually do save. I mean, whatever small amount, I think we are a saving first sort of culture. So do you see the parallels of that finally happening for crypto as well? Or maybe the early start of that?
So early signs for sure, but not quite. I think gold is very, very well established in India. I think it's the biggest customer saving product outside of real estate in India. And I think India has more than 20% of the outstanding gold supply in just households, right? Yeah. So comparing it to gold at this moment is not fair, because gold has been a much safer investment for many generations. And it's something that you can tangibly hold. But I think ensuring that we solve for trust will happen post regulatory clarity. And when that does happen, I'm sure we can make a better case for a gold alternative with crypto. That's pretty much what Bitcoin's trying to solve for. But I wouldn't say it's very well established. I mean, if somebody holds a lot of gold, there's a very low probability that they also hold a lot of crypto. Whereas that is not necessarily the case. That overlap is very small. Just so you know, it's more often than not either or. I mean, in India, the crypto holder is younger, whereas the gold owner is older. It's someone with more experience, someone with more wealth. Right. So I still think there's a tremendous opportunity, and that will be unlocked post-regulatory clarity.
Right. No, I mean, I think I hope I haven't heard any scary stories of, let's say, young guy selling their gold and getting Bitcoin. But
I don't know any young guy who owns gold. but I mean, please
Yeah.
step in.
Well, family goals.
Yeah, sure. I haven't heard that either. But I've definitely not heard of anybody under the age of 30 who's bought gold and also owns crypto.
It's very interesting that you say that. So they're actually like distinct sets of people, but you never know, the mind share eventually might flip once gold goes a little bit less, let's say, as an asset class. But coming to actually the company you guys are building now, obviously you guys have, since you launched in 2018, the world has changed. I think there's so much more, tremendous amount of activity in crypto as a space. What are your next 12 months, 18 months? Like you said, crypto time shrinks in the crypto space. So how are you guys looking at building products, technology, platform over the next 6 to 9 months or even longer? Like, what's the vision?
What's really worked for us is listening to what the customer wants, and listening by directly talking to them. But also, the beauty of crypto is that all of the activities on open blockchain. As long as you have a strong data analytics intent, you can clearly look at where activity is going and what's actually happening. So it's not operating in silos like the Web 2 world. I mean, to understand Facebook's revenue, you have to wait for their quarterly disclosures. To understand Facebook's monthly active users, you have to wait for their quarterly disclosures. To understand how many ads served on Facebook, you have to wait for their quarterly disclosures, right? Time spent, whatnot. All of that is very transparent. You can look at total wallets interacting with contracts, total transactions on a daily basis. You can look at frequency, average transaction size. You can look at frequency of transactions per wallet. You can look at activity across one blockchain versus another, activity across, let's say, an apples to apples comparison of the same product, one brand versus another. You can, all of that is completely open. So we're very fortunate that way, that we know what our value proposition is, which is ensure that we drive that long-term wealth building. And as long as that, we're confident that any new activity can further drive that, we're very interested in making something happen. So an example of something that we chose to sit out of is the whole NFT boom of 2021. Now, while there was tremendous amount of wealth built, if you, let's say, invested in the top 5-10% of the NFT projects, we just didn't think the long-term holder had as much to benefit as opposed to the creator economy. We felt that persona didn't overlap, and we do see a lot of crypto platforms offer the NFT marketplace and the crypto exchange and the crypto yield product, right? We're not here to solve everything for everyone. We know what we're good at and we know what we're trying to do. We definitely want to be one side of that transaction, which is if, let's say, we're the final destination of funds, or a Vault branded property is a final destination of funds. We want to ensure that if customers want to buy NFTs, that's fine, but that doesn't mean we need to build a marketplace. There are very good marketplaces out there. So staying true to what we're trying to do, not chasing every shiny little star in the crypto space is very important. And that clarity has trickled in, or rather resulted in us having very solid customer experience in the products that we offer. Because, I mean, as an early stage company, you can only do a few things well. And feature building really does not solve your core business problems. It's much better to focus on one thing that you do well and be world-class at that, and then work backwards from ensuring that your customers are happy. And that's what's working for us.
So is it more financial products? Is it just more efficiency? You said the whole
I wouldn't say more efficiency. Our mission is to accelerate the transition to decentralized money. We want a percentage of, let's say there are 100% of each customer's banking transactions or financial transactions. And let's say crypto is maybe not even 0.01% of all financial transactions. Vault's mission is to accelerate that growth. So we want that 0.01 to become 0.1 and then 1 and then 2 and then 3, which means, and the reason why we want that is because we think it's just a better system of wealth saving as well as banking. So we're going to drive saving, we're going to drive payments, and we're going to drive banking with this as a primary store of value or store of funds. Anything that comes under that, I would say, cohort of use cases is you're going to see very deeply integrated into Vault over time.
Awesome, man. What about, do you want to do a shout out to the kind of folks who might be interested in joining your team. What kind of folks did you look for? What's your team like? Size of team maybe, or just
Sure.
describe the company a little bit.
So I'm not sure if your viewers know this, but when we raised our Series A, we were just 6 people. We saw the tremendous upside of keeping the team small and working with the best people that we could find. And we're staying true to that. We want to work with folks who are better than us at any function, be it product management, design, front-end engineering, back-end engineering, any engineering, be it marketing, be it biz dev. We understand the difference in leverage between good versus great. And we want to work with the best people out there. And we think we have a lot to offer, because as opposed to many of the companies that are scaling very aggressively, don't get me wrong, we're definitely scaling aggressively on the business side. What someone who works at Vault gets is an exceptional peer group, because everybody is truly, truly great at what they do. And we set the bar really high. And we'd love for more people who are very good at what they do to reach out to us. There's a hiring board on our website. There on Vault.com's LinkedIn, we have a bunch of job openings, and maybe you could even send me a DM on Twitter, because that's open. And we'd love to talk in case you fall under any of the capabilities that an early stage startup can benefit, and we'd love to talk.
Also, what is your Twitter handle if you want to shout it out for listeners?
It's at Darshan Bathija, DARSHAN BATHIJA.
Darshan, the conversation today has been so interesting, especially because, like any crypto conversation today, I think most conversations you learn something new, at least a new aspect of this whole of the world, which is evolving so fast. And given that you guys have built this fantastic product and bunch of services around it, again with the long-term investor in mind or long-term wealth creation in mind, I hope a lot more people will. People who are so far sitting on the sidelines trying to think about this as a volatile market might just get into it for the long run. So it's great that you guys are doing this. Thanks so much for sharing what your journey has been and what Vault does with us today. For everyone listening in, if you like this episode, please leave us a rating, a review, wherever you're listening to this podcast, and tell a friend, share what you heard today, and of course give Darshan a shout out on Twitter or on LinkedIn or wherever else, in case you like what Vault is doing. So thank you so much, Darshan. This was great. Look forward to seeing more stuff coming out of Vault over the next few months and years. Congratulations.
Thanks a lot. Thanks so much for having me. This was a lot of fun.
Are you looking for finance products and services that can enhance your personal finance experience? Are you looking for a space to talk about your financial product or service? And are you looking for a crisp talk show where the conversation is all about money? Well, your search ends here. Hi, my name is Anupam Gupta and I'm host of the Paisa Vaisa podcast, and I invite you for the conversation about your personal finance on each Monday on the IVM Podcast app or the website or on any podcast streaming platforms. See you folks.